So, for the next panel discussion on topic navigating recent changes in tax regulation strategies for compliance and innovation, I would like to call the moderator for the session, Mr. Prabodh Modak, Associate VP Tax and Transfer Pricing, Tata Communications. Mr. Prabodh Modak is a chartered accountant by profession. He is a seasoned tactical tax frontrunner with financial acumen and has a multidimensional understanding of India outbound telecom regulatory and tax landscapes. During his 20 years plus journey in the oldest Indian business house, he has witnessed transfer pricing evolutions in many tax jurisdictions in APAC, Europe, and North America region through tax planning, compliance, and tax controversy, and most importantly, the tax certainty initiatives. Along with that, our panelists for the day, Mr. Malay Agrawal, VP-Taxation, UltraTech Cement, Mr. Mukund Kulkarni, Finance Head and Accounts, KSH International, Mr. Neeraj Goenka, VP-Taxation, Tata AIA Life Insurance, Mr. Rahul Barve, Executive Vice President, Taxation, Z Entertainment Enterprises Limited. Can we have a huge round of applause for our moderator and all the panelists?
Hello. Hi. Hope you are now ready to kind of engage with us in terms of what's happening around the globe as well as within India, and how are we kind of going to take it forward from here, both in terms of tax strategy, tax planning, as well as how the digitization as well as the systems behind it are going to help us around to be a better tax professional. None of us are here going to talk about any sections, any regulations, or any practices. What all we thought about is share our industry experience and the organization, the way we are coming from. So just to start, I want to get a feel of the audience as to how many of you are actually witnessing evolution of global taxation and local taxation. I'm sure we have already witnessed AIS, TIS, the fundamental changes in GST, the other areas where you are being given a notice that you have sold a property and hope you will be paying advance tax, as well as you will be filing proper return about the sale of your house property, or the kind of assessment order that comes to your email ID in next 2 or 3 days. Anyone aware about what's happening in US global taxation, Canadian global taxation arena? How many countries have adopted BEPS? What are all the changes in the Middle East? They are coming up with corporate tax. What is the landscape? How India is gearing up for Pillar 2? Are you guys aware of what's happening around? Because I guess without taking into cognizance of all these global developments, we cannot survive here in India and just carry on return filing, facing the assessments and going to CIT or DRP or the tax officer not talking about it, because believe it or not, they are professional and they are way ahead of us, A, in terms of understanding, and B, in terms of system readiness. So I don't want to take more time. I just want to kind of quickly request all the panel members to introduce themselves, and then we'll talk about the questions that each one of us are facing and our thoughts about it. So.
Good morning, friends. I'm Malay Agrawal. I'm from UltraTech Cement, and I'm handling, looking after the indirect taxes for the company.
Yeah. Hello, friends. Myself, Mukund Kulkarni. I'm take care of finance and accounts along with the taxation and audit.
Good morning, friends. This is Rahul Barve. I am EVP Head of Tax at Z Entertainment. Just a disclaimer to start before our session. Prabodh, Malay, and myself, we are part of listed companies. So these are personal views and may or may not hold the views of my management, our management rather. And just on a lighter note, Prabodh, the question which you asked, it's more a career disruption right now. People must be thinking here what to do in tax in the next 5 years with the way digitalization is going on with the government.
Hi, this is Neeraj Goenka. I'm part of Tata AIA Life Insurance. I head direct and indirect taxation and looking after the digital transformation in my company.
So with that, let me just start the discussion. Malayji, straight question, how are we preparing for the global as well as local tax changes that are happening around us, both direct as well as indirect?
Uh, Thank you so much. You can call me Malay. So that's an interesting question that you have put. How are we preparing? I think this question needs to be seen in the context of how the tax authorities are also preparing. Earlier, the trend used to be that we were better prepared. We knew much more than what the tax authorities were knowing. And different authority had limited information, what was shared with it. Now, the present context is that with the increased level of digitization and online reporting, there is such a massive data now which is available with them. And on top of that, they have been investing big time in developing their analytics. So all that has meant that now they have much more information. They also have much more analysis available with them. And one point which I said earlier, like earlier they were dealing with the information which we shared with them and something more. But now they have an official data exchange between different tax departments or even with other departments. Like for example, direct tax department with the indirect tax, then exchange with the Ministry of Corporate Affairs, with other information like, as you said, AIS, TIS is, you are getting that. So that data, once it is there with the IT department, then IT department, whatever stance you take, it comes to the IDT department.
Rahul, your views?
Joe, just to add to what Malay said, there is a lot of information floating around. The thing is, these officers are reading nowadays, and they're reading beyond the regulations. Anything which is given in the article in the newspaper also is information for them, based on which notices are issued. And just to give an example, before even concluding one transaction, I got a notice from department saying that I need to have the information. I said, "Gav basani lutare aage. Let first the transaction get concluded, and then you ask for information." No, I have the powers. And this is like you have a GST DGGI, you have a state intelligence, you have a circle audit. And all three informations will be requested by all the departments. Let's say, it's like a try. Let's see who gets what. And they are using the power over here, right? Exchange of information is not only in India, it's across the border. Today, departments are writing to jurisdictions in Mauritius, Middle East to ask for information. And then you have to be very careful what information you're submitting, because it has to be aligned with the information you have submitted at India level. If something else goes from Mauritius or Dubai level, obviously you'll be in a soup. So exchange of information, it's like in a big four environment where they look at mining for new prospects. Here it's like all the government departments sit together once in a quarter and they mine for new prospects. Whatever you have collected, pass it on to me, I'll go and now do a search. So I think you have to be very careful, very pragmatic in your approach. See to it that, all the threads are where all the loose notes are all tied up before submitting any information, because you might be looking at only tax. There might be somebody from SEBI who will be looking at something else. There must be something from FEMA. While you will not be expert, but you should be aware of the loopholes in each of the regulations.
Just to give a global perspective where I come from, just to give 3 words and then maybe you can ponder upon. Earlier, the taxonomy of the globe was tax discrimination. From tax discrimination, and you all can agree, we have come to a tax harmony. And believe it or not, in next decade, we will be going to tax homogeneity. I'll take it up later during the discussion as to what do I mean by that, but just keep those 3 words. Going from the tax strategy, so you have heard that we cannot just sit down and then look into the individual transaction or look at our existing strategy and can keep on doing the manual labor in terms of how do we extract the data, how do we reconcile it, and how do we present it. I guess tax department is the only department in organization which works in almost a decade or in 2 decades. A decade of past, what has happened, and then what's going to happen in next kind of 5 years to 7 years, because the kind of developments that are happening, it has become a topic of board It's no more a compliance. It's a discussion that happens in board as to what is the development that is going to impact our ETR, how our business is going to impact it because of the indirect tax, the new budget proposals that are going to come, how are they going to give us an impact. So with all that, we have been hearing about the buzzwords in the morning, and we'll also hear about some other words of data, data collation, AI, robotics. Is that something really meant for us? Or is that some gimmick word which people and consultants are using to kind of fool around? Are Indian organizations really capable of using it? I just want to kind of start this kind of discussion as well with Mr. Kulkarni.
So currently what happened, everyone is talking about the landscape of tax landscape, digitalization or AI, ML. So what rightly Rahul says ki tax department team is ahead of what industry is having. So everyone is now looking for the prospect how they get the data from industry or they get the data from the organization and what kind of use they are going to do. As a digital transformation, you say, or a global taxation part, the in the morning, Mr. Biswas is telling us how many correction notifications or rules are going to change. GST itself around 4 to 5,000 changes has been done. US last 3 to 4 years around 80,000, 85,000. What the number they have quoted. So that kind of things are going to change in the taxation aspects. So as an industry practitioner or as a employee who is working for the organization, we should also aware about that. And we need to mean that wherever we are going to give a data, that should be such a way. So wherever it's flowed, because nowadays whatever return, GST return you are going to file, that is reviewed by income tax department, or whatever transaction is going to quoted, it is reviewed by the custom department. So we need to align with all the data. For that analytical things which needs to be there, that we will discuss in the panel.
Just to add, Prabodh, in a digital world where we are doing business, not in a brick and mortar model, but it's through the web, right? Through web and apps. We're doing a B2B, we're doing a B2C across the globe. And there is a digital tax which is levied in most countries, most of the advanced countries, including the US. Not only at the federal level, but it's also at the state level. Most of us are not even aware, where are the taxes which we are liable to pay when the transaction gets concluded. For example, in my industry, we do transactions through Apple and Amazon, Apple and Android. So all these are gateways through which the apps are being used by the users. Now there is a liability, then who's going to pay that liability? In most of the Apple contracts, the liability is on Apple to discharge a liability. But in case of non-Apple or platform which is not Android or Apple, how do you discharge the liability? So for that, you require a digital technology because the data is huge. The data has to be segregated state-wise in the US. And then that data has to be submitted. That data doesn't reconcile most of the times because you don't know where the data is getting originated. So that is a key question. I mean, that is a key challenge when it comes to digital world.
Yeah, along with that, in US, what morning we have seen is the one single zip code is having a 7 to 8 jurisdictions. So we need to think about not only the zip code, we need to think about exactly where we are going to land the transaction and what is the jurisdiction over there.
Neeraj, your views?
So data, as everybody has contributed. So in our organization, since it's a customer's data, where B2C are the major clients. So it's at the transition level data. It's running into huge number now, and all the data are coming into different patterns, formats. So to get the unified data structure is the key challenge, and how to use that data for filing the time compliances on time in the stringent timelines of the government. That was a big challenge for us. So we have laid down some data lake project, etc. Through that, we were able to get the data, required data on time, and accordingly we were able to reply the notices on time. And even we are also receiving several cross-border notices from the government, and through that data only we are able to comply with the requirements.
I'll give you my example. In some of the European countries, the tax authorities have started asking an access, a login ID and password for the ERP that you are using. Imagine if you have to share your ERP ID and password tomorrow with the tax authorities in India, and then they get a real-time access to the information that your organization is preparing. You need to go back to the transaction originating function, make them aware, sales team, product team, SCM team, your FRNC and FP&A, that is financial planning, and your reporting compliance team, aware of what is that you need to write into the financial ERP system, so that there should not be any misleading information, and there needs to be a single truth right from the start of the transaction until compliance happens. So the days are not far away where your tax authorities will also have an email ID of your own organization, and they will tell you at the end of the month what is your GST liability, or at the end of 15th of every quarter, what is your advanced tax liability. So be prepared for that. And in order to kind of be ready for that, I don't think we need to wait for another 2 or 3 years. There are solutions available in the market. I am not going to either contradict their capability or advocate their capability. Know your business is the first mantra. What is applicable and advantageous for you is the second aspect that we all need to think about when we are deploying bots, or we are using cloud information, or we are using any software to kind of enhancing your capability. The only point as a tax professional, I am asking all the people who are coming to kind of give me an access or sell through this model is that give me an end solution. And what if the same solution is being kind of used by the tax authorities? What is the picture which is going to look like? So my kind of request or a personal experience, and then Rahul can agree to it, is that think of 5 years down the line. Don't look backwards. You look 5 years down the line where the tax fraternity is going to be, and start working on the same right from day one.
Best mindset of Indian guy is to say that, the legacy had an issue. We were all clean. Nothing wrong with us. People who were behind doing it, they had a problem. The same thing will be talked by new people who are going to come in our place, right? So we need to maintain a kind of a governance in such a manner that people who are going to join should bless you rather than curse you. Secondly, on your point of giving a login to the overseas tax authorities, I think the first moot question which will come, and I hope it's not recorded, is when the Indian headquartered companies will start looking at where is the server located for the overseas companies. Is the server in India or overseas? And that's the first question people should ask themselves before even giving the login.
Understand. So I just touched base upon the tax homogeneity, and you might be aware that there were countries which were blacklisted because of the tax policies that they had adopted, and then G20 and G7 countries started looking at where the taxing rate should be, where the profit should ideally be allocated, and that changed from tax discrimination to tax harmony. And now with this pillar 2 coming in, we are kind of hoping that going forward, the tax liability will be 15% all across the globe. And you and me and any of the tax professional doesn't have to answer to management why is our ETR high or why is our ETR low, and why is it better or kind of not better as compared to our competitors. So that's where we are ultimately going to land to, which is a good thing, because I'll kind of hear the conversation with my board, and they said that we don't mind paying the taxes. We want to pay the rightful taxes, but the taxes which are only due for us. We don't want to pay taxes which are kind of discriminatory, and we are ready to fight till our last resort, and we have the pockets to fight it along. I think most of our organization also share the same eco. The point is that in this kind of an environment, how do we structure our cross-border transaction? How do we structure our M&A? How do we structure our group positioning so that we pass the muster of all the tax authorities? Because you cannot have different tax strategies at different jurisdictions. I'm not sure whether you are aware or not. UK, you need to publish your tax strategy on the website, and there are certain Tata group companies which are publishing their tax strategy on the internet, so the tax authorities can actually go through and then see what is the strategy that they have adopted. So that kind of transparency is what is expected between the tax administration and the taxpayer. The only point which I'll share with all of you is that the tax authorities cannot tell us how to do business. Let's have the boundary very much sorted out. We know how to do business and we will carry out the way we want to do business. Whether the taxing rights and taxability is in India or in US or in Mauritius or in Dubai or in Singapore, let's discuss that separately. They cannot also come and then tell us as to what kind of systems that they need to bring it to. We can design the systems, we can show it to them, they can provide the suggestions. Same is the case with transfer pricing. I guess I'm not sure whether how many of you have an exposure to the global transfer pricing compliance. With the increase in the scrutiny of intercompany transactions, especially India inbound companies or India outbound companies, tax authorities are minutely looking out at every remittance. I'm not sure whether you are aware or not. So, funnily aware or not, even my management is aware that there are 3 ways to remit the funds. One is dividend, the other is royalty, and the third one is expenses, reimbursement. So, capital issue. So, imagine the kind of awareness the tax fraternity, the board, as well as the tax authorities have. Data truth, sticking to the substance of the transaction, and making it simple so that the tax authorities in Japan, the tax authorities in Brazil, and the tax authorities in Kuwait understand the same transaction in the same way, and you are not challenged with double taxation anywhere in the world. I guess simplicity, truthfulness, and getting a certainty in advance rather than waiting for litigation to kick in are the 3 things I will recommend for all of us to kind of get into so that our job is easy. We can move from compliance to actually strategizing what an organization should look like 3 years down the line. Any of you have any thoughts about it?
So just to add, suppose a tender comes to you for evaluation, right? It's a global tender, and you have to submit a bid, and it says that taxes are on your account. How do you try and bake in a tax rate for US where you're not even aware whether you'll form a PE or not? 2 years down the line, 3 years down the line, even in a European jurisdiction or in African jurisdiction. So how, in such situation where you have to bake in you have to submit a tender with a right cost, and the right cost has to have also a tax impact on that cost, which is also ring-fenced to such an extent that tomorrow, if there is a demand or there is an excess liability which comes, then you should be able to absorb that demand as a part of the business margins. So any answers? How do you somehow build such a tender? You have a 3-4 day window to do it, and you don't have luggage of time to reach out to consultants and take their views across, say, 10 countries. Any view? Anybody? Guesswork, how you'll do it? You'll say 10%, 15%, you'll just bake in the cost and finish it? Any view? So, basis your experience, you try and ascertain in certain situations what would be the outer limit of tax. If that's not possible, you then try and see what is the maximum tax rate in that particular jurisdiction. If that also is not possible, then you try and do some kind of a derivation and bake in that as a part of the project margin. So include that cost as a part of project management. Tell the management that this is the cost which you have to bake in, because you are not aware of the uncertainties which you are going to face 2 or 3 years down the line when the assessment comes up for this thing. At the same time, you can't be so overboard and so this thing that you choke the business in such a manner that business loses the tender. It should be a balanced approach wherein your costs are covered. A balanced approach when you win the tender. The strategy should be in such a manner that even the risk passport should be in such a manner that it covers the entire risk of the tax, potential tax which would come in 2-3 years down the line. So that is something which is expected from the tax team when you have to do it, and you can't then rely on the consultants to give you advice on this. You have to do it yourself because your head is on the table.
Yeah. Added to Rahul, so we are the best judge for the evaluating the pricing or evaluating the cost, or you can say evaluating the taxation which is going to arise if anything has happened with that jurisdiction. What rightly said, the transaction should be very smooth or very simple, which can explainable to the others. It should not be such a complication that we are into the middle of the discussion and say, okay, we will come back and get back to you. So that should not be there.
So just to add to this, now what you often actually see on the ground is, well, you may be able to explain that the transaction is in these and these terms and it is quite simple to explain as far as we are concerned. The way the same thing is interpreted by the authorities and certain issues or angles which they bring in, or the angles with which they have started with, that is where a lot of challenge comes, is how to then put across our point of view which is appreciated by them. Now I would also like to add one more perspective to this. Like so this we were discussing on cross border, here we meant international transactions. But you can also find, if I say why look at only international, even within India, cross border for us could mean transaction from one state to another, or it's a normal transaction, supply by me to my customer. My part of the compliance is okay. So the authority comes and says, okay, I don't have a problem. It is all you have done. It is all. It is okay. Just give me list of your customers where you have done this. You have 1,000 customers. He said, just give me their list, contact address, all that. I don't have any problem with you. Then they go after each of those customers. Okay, they had done this. You should have done this. You have not done this. Now I am going to demand from you. And what happens then in the market? In the market, there is a big issue. They all come running कि अरे अभी ये हो गया, अभी मैं क्या करूँ इसमें? So if I share an experience, so once it happened, so we went and met the officer who was asking them, what is the issue? He says nothing. The issue in short is I am not able to collect tax from him. He is claiming all the set off. Actual tax collection is very less. So he said, you reduce the tax credit which you are passing it on, so that he will, if you do so, then he is out of that. Otherwise, you are okay. I can't do anything with you. I will catch him. So that is how you have to look at all these various aspects.
So taking a clue from him, how many of you are kind of have thought this idea, and that actually popped up in my mind, and I have shared that with my management, is that rather than being a reactive, and as I said once again, that we are moving towards a tax homogeneous world, be it in India, intrastate, when all the states are going to charge around same rate of tax, there is a homogeneity in GST also. Why as an organization, we can't choose the state in which we need to do the business? Let the tax authorities also get the feel of it, that we are not happy with the tax administration or the way they are conducting, and we are moving our business from state A to state B, or at least some part of it, so that we can land up in a tax-friendly organization and in a country which gives us a certainty, which gives us a respect, and which gives us a freedom to choose how a transaction needs to be carried out. I'll leave this thought once again to you guys, as to rather than just honoring the demands of sales or your production team that we need to set up a factory in so-and-so country or so-and-so state, and then dealing with the GST tax authorities or tax authorities, why can't we tell to the business world that I had gone and met the tax commissioner of so-and-so state. I am going to come and then tell him, as a part of tax advocacy, is that my management is thinking of setting up a plant which will have a capex of so-and-so crores, which will have a turnover, and this is how your tax collection is going to go up. And then engage with the tax authorities as to what is that, what you can help us with, which other states can't. And there is a fair competition amongst the states also in terms of attracting the business, the way there is a competition amongst various nations to attract the business geographically. I guess this is something which all of us kind of should think through and then can go back and try and test it. I'm not saying that it will happen on day one, where you can move your factory from, say, Maharashtra to Orissa, or from Orissa to Jamshedpur, or to even Kashmir or Himachal or Punjab. But at least let us kind of think through if there is any savings or if there is any value addition as tax professionals we can bring in. That can certainly help towards making our business more efficient as well as more profitable. So on this same topic of rather than being reactive, I just want to kind of ask each one of you, as to, do you think the technology as well as the awareness of global tax development and local tax development is going to make all of us a better tax professional? Or do you still think being responsive is the best time and best idea, so that let's wait and watch if we get the muster of the tax authorities pass without any efforts, we can still do it. How is your company or how are you taking this approach of shifting your tax reactiveness to tax proactiveness?
Yeah. So I think need of the hour is even if a transition occurs, we should know the prior to occurrence of the transition. So, for example, preventive measures needs to has been incorporated. So basically, we have did various kinds of data analytics basis the past experience which we have received in the GST era or even direct tax era. There are so many 133(6) notices we are receiving nowadays. So basis that, what would be the probable causes of litigation which we can analyze on its own, and we can highlight to the management so that readiness of the management can be prepared basis those data. That is the one thing which we have to do. Otherwise, if you want the reactive measure, then definitely we are gone. And management will always be, there will be always be plethora of notices, etc. will be there, and how to deal with that. So with the preemptive process, we can also curb all the areas in our system so that those, at least those things can be mitigated. Or if it is a litigation item, then we will try to cordially represent to the government to these things are in the bit of interpretation and in the interest of business also.
I think it's mainly to do with the mindset. There are three main or four main stakeholders within the organization. One is the business, one is finance, and finance has two subsets. One is the accounting team, one is the FP&A team. FP&A team also is an offshoot of business only, I would say. And then there is a legal team. So all these three have to be aligned, because the thing is everybody has a different KRA. And those KRA at some point of time don't culminate back to the organization's higher purpose. So as long as that mindset is there, and that mindset somewhere, I would say the MNCs are much more having an edge over the Indian companies to have that kind of alignment within those stakeholders. Digitalization definitely would help because that will bring in transparency. You will be able to better analyze the transaction, upfront do a planning, especially in indirect tax, Malay, if I can add, state-wise where you have GST blockage. You can upfront take a call on how do you do a cross-border transaction, how should you move the credits, and not on paper. It should actually be movement of goods in case of a manufacturing company or a trading company. In case of a services, how do you do the ICD and cross-charge to see to it that the credit in all the states are well balanced, rather than at the end of the month you go back to the CF and say no, there's a credit accumulation, I can't help, it's a law of the state. No, it's not a law of the state. You also have the tools and weapons available with you. But whatever you're doing, it should be consistent policy. There should be a management sign off. Just don't do it because last 6 months there's credit, you moved it. Next 6 months there is a credit in different state, you do a different strategy. Not that way. It should be a consistent policy. There should be a commercial rationale for doing it. And those are the proactive steps which you can take as a tax professional while implementing the transactions.
So continuing with what Rahul said. So first, on the point of how much we can, should we be prepared in advance or we go more on a reactive basis. This is something we don't have much of a choice. We can try. We should in fact try our best to be prepared in advance, but you still have to be, you will have to react or respond whenever things happen. The way the requirements are being changed by the tax regulators, the reporting requirements, you prepare for something, then they come up, no, now I want it like this. If there is some certainty, some things they settle on this, it helps you to prepare. But every few months you find now some new requirement is coming. This has to be reported in this manner. This should be separate. If I have to just take an example of in GST only. So the most recent thing which has happened is IMS, Invoice Management System. So whatever 2A, 2B you tried to do, you thought, okay, now it is more or less settled. Instead of dynamic, I have static reports. Now suddenly you find you are back to square one, everything has gone. you are discussing, there are issues which you don't even have an answer what you are going to do. So if you are not able to address that properly, it could have a very serious repercussion on your bottom line. So that is why, so you have to look at that, but anyhow you need to prepare. If I have to give an example, so one of the provisions was that it will allow you a tax deduction for the credit notes if you have a confirmation from the buyer that they have done it. How will you get it? Nobody knows. The original GST provisions had a mechanism for that. They junked that mechanism but kept the provision. And now they say, I don't care how you are going to do it. My provision says this will be allowed only when you are able to do it. So you prove it, otherwise we can't allow you. So there was nothing. We developed some system, our internal system. This is how we are going to do it. We put it on our online, in our digital thing that we are going to collect it, put it all over there. Nothing was there, but we did it ourselves. Then the board comes out with a circular that no, I want it in this form. There was nothing, so we will do something, but I want it in this form. Certain value, I want certification by the auditors, or someone, I will take it like this. But that is not how we had prepared. So now, should I prepare or should I not prepare? So the situation today is, it is better that you still prepare, while that is not going to be foolproof, because goalposts can be changed. But it's better that you still have a better preparation. If and whenever they ask, I can still say, okay, look, this is what I already have. Now you have asked for something different. I would need to go back to them. It will require time, and let us see how much they cooperate. So some of your customers with whom you are not dealing or you had a fallout, they might say, I am not going to respond. But that is your problem.
Understand.
The most blessing in disguise today in the tax law is transfer pricing. Where you have a proactive, you also have a low hanging because you can be reactive also. Yes. And I'll give an example for this. One is, for all the listed companies who are going through the audit committee and taking approval well in advance as part of the Companies Act, that time also you need to do a benchmarking. You can go wrong at that point of time. Secondly, after the year end, you do a true up, true down. Again, you can go wrong, right, before filing the return. Third is when the TPO will send you a show cause notice. There also you can make a changes. How beautiful the law is, Prabodh, and you are a transfer pricing expert. 3 times you can make a changes, and still you can say that, if a person says I'm wrong, I've gone wrong on my this thing, then what else you want? There's a beautiful certainty given by the government to you under the Companies Act, under the Income Tax Act, as well as during the assessment. So what else you want?
I couldn't agree more. GST and transfer pricing, I guess, apart from tax professional, you will find more experts within your company who can guide you about how you should be doing compliance rather than we telling it to them. I often say that I need to change my profession from a tax professional to either a treasury guy or to a reporting and compliance guy, because all of you know the tax law so well and they teach us the information that you are asking is not of use. This is certainly not going to sail through the audit or the certainty period. So with this kind of approach, I'll start with my own example. Is there a best case practice that we can actually introduce, kind of an innovation, and then we can share across? And I'm going to kind of end the discussion and I'm going to open up to the participants also, if they can share their best practices in terms of how we can avoid a litigation or minimize a litigation and make sure that our individual organization is kind of 100% tax compliant, because ultimately every management has to certify on the financials, and you know the kind of implications of any misstatement or any true up or any wrongfulness on the true and fair view or true and correct view in the transfer pricing is going to impact your image into the market. So one example I would like to kind of give it to everybody is that identify your key stakeholders who are going to carry the compliance or who are going to make you carry the compliance. More or less, it's the sales team. Because unless and until they generate the revenue, or unless and until the supply chain management makes any procurement, there is no tax compliance. So why do you want to work in silo and then not educate your SEM team or your sales team? Why don't you go proactively at the start of the year? Give them a list of your WHT implications, give them a list of your indirect tax implications, make it available on the website, and then train them on a regular basis and tell them that if you are going to do a contract from jurisdiction 1 and if you are going to offer this service, this will be the tax liability from a direct tax perspective and indirect tax perspective. If you do it otherwise on a standard basis, this is the tax liability. So you can give a competitive advantage to the customer and to your sales team, whereby they can enhance their incentive also. So if you kind of attack your compliance at the start, whereby your sales team doesn't sign any wrong contract or kind of accept gross up clause or accept even your indirect tax liability, you're not kind of sitting at the end of the quarter when you receive an invoice or when your payment is declined and your collection team is behind your life to clear the tax clause and or make an exceptional approval. So one good practice anybody can think of is interlocking with SCM and sales team, making them aware of the tax laws. And mind you, they are not going to come and take your job. You will be still carrying out the compliance and litigation. Nobody can replace tax professionals. But then why don't we start engaging with them, make them more aware, and kind of ensure that they don't do something which is detrimental to your compliance and making you end up in litigation. So this was one thought. And second is doing some things centrally so that you have control, especially if you are an Indian inbound or say Indian headquartered company. Keep your strategic functions locally, which is next to your management, so that you are aware of the thoughts which are going out, what is the way the organization is planning to expand or to kind of diversify, so that you are not at a far end and then you come back at the end of the implementation stating that no, say for an example in EU, this is something which is not acceptable. You should have thought it earlier. You should not have kind of done this without consulting me. So proactiveness and continuous engagement with board as well as with sales and your procurement team. I guess those are all two innovations. I have personally believed it. I have tried to implement it in our organization, and I have kind of advocated it to all the people who are within the tax fraternity. If you can share your thoughts about.
Just added to Prabodh, it's a continuous process. So we need to develop the business automation, you can say, then intelligent automation, where all the stakeholders are coming into the picture and added their views as well as a our tax profession. We just give an input to them. What are the things needs to be added? Because after completion of the transaction, if you go back and tell them ki these are the things which you are not considered into the tender or the contract, which is not fruitful for the organization. So intelligence is the one portion, or innovation is the one of the portion where you can just take a historical data, what we have a contract with the different customer, with the different jurisdiction, and how we are going to align with the current tax position.
And I'll share one example in our organization. It's not the innovation, but it's an ease in compliance, because we have got maybe 5,000, 6,000 number of distributors who helps us in our top line growth, definitely. But those distributors are, so we are having the big input credit reconciliation with those big distributors, and because they are almost unstructured people, and some are skilled, most of them are unskilled. They don't know how to file the GST returns. So we are having a huge time of trouble to manage and to reach out to them and to streamline their GST filing. So what we have did this change in the process, and so we have taken ownership of their GST return by us. So not exactly GST returns, but we have automated their invoices raising, and through invoicing mechanism, they just have to log in into their own GST portal and just to submit the returns. So what happens? Their input credit, our input credit got seamlessly credited, and they are easy in filing. There is low cost. there is no cost on them, and so with this process we are having definitely change in. So what I'm trying to say, definitely you are right that we have to go hand in hand with our distribution, with our sales guys, so that we have to understand their problem, what is their problem, and then we have to find them some solutions within four corners of the law.
As a tax professional, most of us have become Kumbhakarna, okay? And an example I want to give over here is, the most dangerous food which we all eat is covered matter. ये 3 साल का assessment है, nothing is done, you should also pass the same order. Is that the approach? Things have changed today. I mean, that's not the approach. TPO, last 3 years, this is the disallowance been done. You also follow the same thing. I go to tribunal, I'll fight it out. What is this? Can you not be innovative? Can you not change the methodology? Can you not challenge the constant? Are you going to say that what has been followed for the last 10 years, I'll be doing the same thing? No. That's not the way you do the business. You have to innovate. I'll also give an example of this Chennai decision which was there, Rokabat. One day before the hearing, the advocate calls me and says, Rokabat is there, you should file additional ground. I said, for what? Saying that this thing, the reopening is, the assessment is not as per the provisions of the Act, and hence it should be dismissed. I said, I don't want to do it. Rokabat is going to be overturned by Supreme Court. I don't want to fight on this technical ground, I want to fight on merits. I'm not taking the additional ground. He said, but what if the management asks you? I said, it's okay, I'll fight it out, I'll tell them. I'm not here to buy time. I want to nip it at the bud. Let the matter get over at merits level. I don't want to keep it because of a technical ground. And I'm not of that mindset. Because that matter, we know Rokabat, how can department, leave 200 assessments and say that, no, we don't want to do the assessments, and High Court will say that, okay, go ahead and close the matters on technical grounds. No, it's not possible. You have to look at how the Supreme Court also is approaching the matters nowadays.
So on this point, as Prabodh was rightly saying, so we need to reach out to our various stakeholders, firstly internally, that whatever we are, whenever we suggest that you make this changes, you adopt a different practice. So it's not just that we want to make our job easy, but it's what is required to de-risk the company, and it's going to help you. Ultimately, that's where you are going to help you, because you will not have problems later on. Of course, the pushback which comes is, but this is how the competition is doing. Whether they are actually doing or not doing, or probably on the competitor side, their team is also saying, idhar wale kar rahe hain, isliye humko bhi karna hai. So you have to discuss with them, okay, you tell me what you want, don't tell me how you want to do it. That if you say that I will do like this only, then probably there is nothing left for me to do. What you want to do, and this is your proposal, we probably in most of the cases, we would be able to help you do the same thing with minor tweaks of that. And this is where we need to, what I would say, look at our mindsets in the tax department, at the other ones, that look, we are all on the same boat only. You are seeing from one side, I am seeing from another side. Let's discuss and look together holistically. And no matter how much the regulations are changing, this digitization is happening. One thing where we have to always keep back the focus is look at the basics. If we don't look at the crux of the transaction, what is the basic thing, then other things can get awry. So you just look back, look at the basics, and then you can move forward whatever you want to do.
Any thoughts? Anybody would like to share some best innovation, best practices? I guess we are about to close. So, what he was talking about has to change. In my 20 years of professional career, I'll not name the person, but somebody had said, अंदाज अपना अपना में वो जो कैरेक्टर है ना, ये आया तो कुछ ना कुछ तो लेके जाएगा. Whenever a tax professional enters CFO's room or board room, the view is that ये कुछ controversy लेके आया है, ये मेरे प्रॉफिट से शेयर मांगने आएगा. And I used to hate that because tax is ultimately a result of the operations that do. And I had actually a tough fight with my sales team and my CFO. We are not the culprit. We are basically the last gatekeepers where you close your certainty. So if you have done something wrong, we are facing a brunt right now. Because you cannot go and then blame tax professionals for doing something wrong which we have not gone ahead and do it. The only point which I'm trying to say is that try and let us make a change in the perception of the management. Is that the moment they see us, they should look at ये कुछ opportunity लेके आया है tax saving की या some profit enhancing की, and then let us approach that way and make ourselves or transform ourselves with the knowledge and strategy that all of us can use, and then make board kind of eager to kind of wait. There is some agenda item of tax team coming in. There must be something interesting coming in. So why don't we kind of listen to it, or why don't we get a pre-read to it and then kind of do it? I guess if we are able to do that during our career, we would have achieved kind of a transformation of 180 degrees.
For that, we need to add it. We need to part and parcel of the contracts, or we need to part and parcel of the business, which I really want to be added into the organization.
And sorry, just to add, so I attend a lot of board meetings, and I've been seeing the mindset which is happening over there. Tax is at the front end over there. Okay, a lot of questions are asked in terms of how do you going to manage, what are the issues, are you having a tracker, do you track the notices properly, is the compliance officer aware how much exposure we have? I mean, the questions they are asking are huge, and sometimes I have to tell them, boss, right now your job is to only look from Companies Act perspective, income tax, leave it to me. I had to say that way for a couple of times, but I mean, this is the way. Don't have a mindset of cost center. We are not a cost center over here. We are a profit center. We are adding to the bottom line. We are adding to the cash flow. Please remember this mindset. Somebody calls you a cost center, tell them that we are not. Maybe other functions are there, HR or something else, but we are not. Okay. Please remember that. I mean, it's for you to change the way business is going to look at you.
Hello. Can you hear me? Yeah, good afternoon. Om Prakash Sharma, this side from Skoda Auto Volkswagen. I am heading the indirect tax function of Skoda Auto Volkswagen. I'll talk about two things. One is the relevant topic of the proactiveness, and the second is the automation. On proactiveness, first, I would say that we have to internally fight. I mean, not real fight, but honestly to get the data when the assessment is coming. So first thing what we did is that we have prepared one tax policy where we have assigned the responsibilities of each department, that what kind of a data they are going to share with us and what is the timeline for it. And we have get it signed from each department. That has been published on the internet as well, and that has been presented to the board as well. So now it is published. Nobody can deny that they cannot share the data in time or so and so. That's one thing. Second, we are proactively approaching to the stakeholders where on sales side, for example, what kind of the incentive policies they are going to float, what is going to be with the impact, GST impact of it, whether the policy drafted is as per the section 15 or not. Those kind of proactiveness, and likewise we are doing with HR, what kind of data we would require for tax audit, whether they made the payment on a PF payment on timely basis or not. Purchase department, whether there is any kind of defaulting supplier who is not filing their GST returns. So we are educating the cross-functional teams. So these third thing what we have done is that we have prepared a common folder where we have asked all people that these are our historical experience and what kind of data we are going to need. So once the year is closed, you have to share the entire data on this folder, which is accessible to all, be it indirect tax, direct tax, or the customs. It is accessible to all auditors as well. I mean, the accounting department who is getting done the audit as well. So these are kind of proactive measures we are taking. Now come to the innovation. Recently this section 15 where you have to cross-check with your recipient of the goods, that whether on credit notes they have reversed the credit or not. We are developing the tool for that as well, and as Mr. Agrawal said that whether we should go ahead and or not, we are in fix basically. But taking a clue from history, what we have done in transfer pricing, for example, the one of the major litigation is intercompany services, where you have to submit the proofs. And what we have done is that when the assessment comes, you have to, after your internal people, that you provide us the proof of the services, what kind of services you have provided, what are the contracts, etc. So we have developed one platform where we are not processing the invoices unless they have uploaded the proof of services along with the contracts and the what kind of nature of contract, whether we really receive the services or not, and then we are approving at tax end. We named it as a proof of services. Once we approve it, be it a GST impact or be it a transfer pricing impact, once we approve it, goes to AP team for making the payment. So this is one of the example of innovation. One platform we have developed after this ACP provisions in section 9, where though you are not taking the services, the good supplies are there. So there is a thin line, gray area, whether you need to collect the tax documents, 10F, P&OP declaration, TRC as well from the good suppliers. But because of this section 9, there is an interpretation that once you cross the threshold, you have to collect these documents. Otherwise, the income would be taxable, though it is a good supply. And the transition has happened, outside India. There we have developed one platform where the automatic emails are going to the suppliers, and we have asked them to upload their, these 3 documents on the portal, and they have to key in what is the validity of those documents. And once it is going to expire, maybe 2 months before, automatic reminders goes to them that you need to upload a fresh document. So these are the examples. And one last thing from my side, I'll take the liberty to ask you the question, is regarding, though it is dated, MLI is dated, because the tax environment is quite dynamic. So that's the reason I am saying it is dated. But you look at the MLI, in MLI, we probably have the double taxation treaty with 94 countries, or maybe nowadays it may be more. So my question to you is that we, through this MLI instrument, we have ratified some things. But the other country, for example, China, would have ratified out of 5 we have ratified, they would ratify 2 only. So is there any kind of a mechanism or kind of automation can be done that which tell us that, okay, these are the points ratified by the India as well as the other country as well, and these are you have to look at in a different way. So could you think of something which a tool?
Maybe that's an interesting question to the people sitting outside and the big fours. They would definitely come back. But I get your point. As a tax professional, rather than comparing it and spending time on interpreting it, why don't we get an access directly and then start applying that on our mind? Just on that particular point, while I should not be quoted anywhere, the tax treaties, what we have signed, are way back where we were not even top 5 or top 3 economies. Don't worry, majority of our tax treaties are going to, take my word, and then believe me, majority of our tax treaties are going to get amended. India is not going to agree to the same tax policy and tax strategy. So I hope both when we are renewing our DTA agreements, all the points which you rightly said are to be taken care of, so that as a taxpayer, I don't have to kind of go around and see what are all the implications in 90 countries and then find out what is my ultimate tax cost to the transaction.
In fact, just to add, we don't even need pillar 2 right now, okay? It's a rounding of difference. You add something to GST, I think that will be more better rather than going for a pillar 2, which is more compliance burden rather than collection burden. I mean, 8,000, 9,000 crores, what we are looking at, it's peanuts. Right now, the overall GST collection is, I think, 180 lakh crores. Where are we, what are we stocking? US is pushing back. We should also push back, actually. We don't need that.
I guess we are running out of time. So maybe we can continue this discussion one-on-one, maybe during next few hours where we are. I hope you didn't feel sleepy, and then the interaction was kind of entertaining and kind of collaborating. Hope we were able to give you something to think about. Thank you all for listening it patiently.
Moderator and all the fellow panelists for such an insightful session. I would request you to please stay back on the stage. And I would also request Mr. Neeraj Goenka to felicitate all the panelists as well as the moderator.